Hey guys, welcome to another YouTube video. Yeah, always make DERIV and no one makes better. Yesterday we took a very important trade. I gave a signal on the signal group to take volatility 101S index, and we made a profit of over $11,000 from it. And the market really went very fast. It bought really fast. It was selling, but then I saw that there was a means for the actual market to actually move, and then I gave the signal for us to take the necessary trade. Right now in this video, I'm going to go through the whole course on how I got that particular signal. I'm going to just, reanalyze the market over again. I'm just going to analyze it over again, and so that you actually understand that, yeah, this is something that we did, and so that you can be able to do it yourself. Like I keep saying, I've decided to bring out some of my time this year to make sure that I go out there and reach out to a lot of important topics in price action, so that a lot of people can stop blowing their accounts, taking forex or in forex trading. People that blow their accounts, it's too much. And by the time you begin to watch most of the videos we posted or the ones we're going to post more, believe me, it's going to cut down the losses that you're going to be making. Personally, I still blow accounts, but in comparison to when I started, or in comparison to when I learned this strategy new, of course, every day I keep learning. And so right now we're going to move into the charts so that you see how the thing actually works. So here I'm going to delete a lot of things. I've already analyzed the market already, but since I'm making a YouTube video, I'm going to delete everything that I've analyzed already. As you can see, this is the entry we took in the trade. You can see it's at Sniper, and how he gave us a whole lot of money. Gave us a whole lot of money because the trade was at Sniper. Right now I'm going to actually delete some of the things we've done already, so that the analysis I've done, so that you can be able to watch through and also understand. Okay, so now this is volatility 101x index. Today is I think 19th of April or something, and this is volatility 101s index. And as you can see how the thing works, it's like I keep saying in other YouTube videos, if you want to analyze the market, the first thing you need to start from, or the first inception, is to go to a higher time frame. Like I always say, there are 2 or 3 different categories of time frame, especially when you're using a phone for your analysis, a smartphone for your analysis. There's always 3 categories of time frames: the M1, the M5, the M1, the M5, the M15. I describe them as lower time frame, while the M30 I describe them as intermediate time frame. While the H1, the H4, the D1, the W1, the M1, MN standing for a month, W1 standing for 1 week, D1 for 1 day, H4 for 4 hours, M5 for 5 minutes, M15, just like that. So the H1, the H4, the D1, the W1, and the MN, I always describe them as higher time frame, so that it can give me a whole, new look of, taking stance. And right now, every time every time you want to analyze the market, the first important thing, or the most important thing, is to always start from a higher time frame. If you start analyzing the market from 5 minutes, it doesn't make sense, because you just be limited to things happening in the 5 minutes. And most times in forex trading, the market always respects the higher time frame. And so if you have a market that is meant to respect a higher time frame, the higher time frame is telling you to buy, while the lower time frame is telling you to sell. And then because you do not analyze from the lower time frame, you just analyze from the higher time frame, you're just going to sell the market, taking the direction that the lower time frame told you. You're going to make losses, because sometimes the market will decide to follow the lower time frame, sometimes it might decide to follow the higher time frame. And so the best means of trading is when you must have analyzed all those things. You've seen what's happening in the higher, you've seen what's happening in the lower time frame. Then you tell yourself, cool, all these things are happening. What am I going to do? The best thing is only take trades that have effect on both the higher time frame and the lower time frame. That's to say, the higher time frame is telling you to buy, cool. The lower time frame is telling you to buy, perfect. That is the time you have to take the trade. Not when they are telling you different things. If the high time frame is telling you to sell, while the lower time frame is telling you to buy, don't take the trade, because it's very confusing. Unless, of course, you're very experienced and then you've seen some certain things in the market, and okay, this is actually the direction the market is going to take. And I want to say something else. I don't trade ranging markets for a lot of reasons. Ranging markets are not that very valid, and I don't trade I don't trade it, because there's no specific time when the market is going to break out. There's no specific time when the market is going to come back. It's just very, very weird, and it's a whole new lot of process, that you have to accumulate. But there are people who trade it and they make a lot of money. But if you want to be consistent, remember that what I'm teaching is about consistency, not just about making money. You just make $5K. Cool. No. You have to be consistent in it. You make $5K today. Tomorrow you make some losses, but the next day you hit a 10K, and the profits are getting bigger and all this. So let's just quickly rush to the trade. I don't want to waste much time in this video. I've deleted everything already, all the analysis that I took, earlier on. Now, like I said, this is the 1 minute. I'm going to have my time frame drawn from the 1 minute. I'm going to just see how the market reacted from the 1 minute before getting, like I said earlier, what I'm doing is analyzing what I did before that got me the profit, the profit you're seeing on your screen. And that's just what I'm doing. So I'm going to go like this. This is how the market was supposedly meant to move at first, but it didn't move like that. There were lots of resistances, you could say this. So the market has been invalidated a lot of times. A number of times it has been invalidated. So I can just use this as my next invalidation, or the next point for a reversal. Remember, for a trending market that is bullish, what we describe, or what we have the higher highs, the higher low, the higher high and the higher low for the troughs and the peaks. Why for a trending market that is bearish, the lower low and the lower high, just to identify the peaks and the trough. So in the H4 time frame, now most of the times when you do your analysis from the W1 or something, you'd see something like that. You just have to make sure that you correct it on time. Now, cool. Now I'm going to take the next analysis. This is H1. This is D1. There isn't much thing to take here, so I'm just going to go like this. Okay, let's go to H4 time frame for an analysis. Sorry. Milking DERIV is not very easy. It is easy, but it takes time. Sometimes you just have to hold the trade. Sometimes you just have to be patient. Sometimes you just have to make sure you're looking at the chart. Yeah, it happens a lot of times. And the good news is that with time, you become better and better and better with it. So this one has been invalidated and perfectly held. Cool. So I can say that, yeah, that there's a movement in this angle. I can say that there's a movement in this angle. Now this market is supposedly meant to sell, but you can see here that there was also this particular point here. There was a fake breakout, kinda. So I'm going to stop to use this part as my lower low, or rather as my higher low. But I'm going to make use of this point. Why? Because this place here has been invalidated. So I'm going to go back to the D1 to redraw my time frame, to redraw my trend line, to better suit my needs. And we'll be having something like this. Now, if we have something like this as well, you'd notice here also that here there was an invalidation as well. There was a fake breakout. Now, remember that before this time, I haven't seen what's happening here. I didn't know that this was going to happen. You can see this blue arrow here indicates that is where I took my trade. That's exactly the point I took the trade, and it's going all the way up. This is H4 time frame. It's a lot of money, like you've seen the profit, and the signal was actually sent to the signal group, like you know. So before now, I haven't really seen this part, so I didn't know that this part existed. So I was just making use of the other part. So now, drawing this trend line like this is very perfect and it's very correct. But if you ask yourself, this fake breakout here has invalidated the trend line, so I have to readjust. And the readjustment I have to do is this. Go back and have this drawn here. Cool. Now this is what we have. So this is telling me that this market is supposed to go up or buy up But I needed a more confirmation. I didn't just take the trade here. I needed a confirmation to say, okay, yeah, this is the point where the market is going to take. As you can see, the market is a sniper. I took the market as sniper. So there must have been something that prompted me to taking this trade as sniper. So let's go check, what that is as well. If you go to the D1, you'd see, okay, this market is moving, this is very fine, this is very perfect. And then you're having all the things you're having and all those. But then there's a movement here. Remember, for a breakout, there must be a movement in the former direction of the market for you to have the breakout that you intended. So, what did we do? Let me delete this. Now we'll go to a lower. You can see how we're going step by step. We're coming step by step. We're going down. Now we'll go to a lower time frame in M30, and we'll have our trend line drawn like this as well. You see how perfect the market is. So this is a pure indication that, yeah, this market has broken all the way out of here. And then there was a break, there was a retest here. And then at that, I should take the market immediately. And I took the market. And as you can see, the profit it gave us all the way up, hit all the thick profits we've given. And we made a lot of money from it. So it's just very easy. But you need to understand the whole principles behind the whole perception. And you need to know, okay, this is some of the, there are lots of things attached to price action. A lot of them. And like I said, I'll try to cover a lot in this YouTube channel. So you just have to subscribe and expect more videos. But the point I'm trying to make is it's not as easy as this, but yeah, with time you get to see that this is how the market actually was. That is very, very easy. With time, experience is more like the best teacher. So I don't want to waste much time in this video. This is Milk Derive. All we do is Milk Derive Group. Contact us at www.milkderivefsgroup.com. We have a signals, mentorship, and yeah, I think that's it. I don't know if you enjoyed the video. If you did, give us a thumbs up. Thank you very much. This is Milk Derive.